Nigeria's insurance sector reached 1.1 trillion naira revenue by the end of 2024, driven by inflation-adjusted premium increases, compulsory policy enforcement, technology adoption, and new market entrants. The upcoming Nigerian Insurance Reform Bill is set to reshape the industry with stricter regulations and an estimated 600 billion naira in capital injection. While higher claims and reduced foreign currency gains may impact profitability, stronger policy enforcement, expanded product distribution, and a larger capital base are expected to support long-term growth. Well, joining me for more on this, I have right here Ayokunle Olubunmi, the head financial institutions ratings at Agusto Co. Thank you so much, Ayokunle, for joining me today.
Thank you very much. Good morning. Thank you for having me.
Good to have you too. Well, it's quite interesting to see the insurance industry surpass the 1.1 trillion, naira revenue mark. However, accompanying questions for me would be, what percentage of that amount is retained as profit? Because we know what claims can do and how, we're having elevated claim figures now because of inflation also. And I also want you to talk about how sensitive this is to macroeconomic conditions moving forward. I mean, before now, we were thinking, yes, inflation is, it's easing. But with what's happening now in the downstream oil and gas sector, I don't know if inflation is going to be easing or not. But of course, the meeting today will tell us the direction we're going. But, let me get your thoughts on those two issues I mentioned.
Thank you very much. As highlighted in our report that was just released, the insurance industry, the insurance revenue grew by 35% in 2024 to 1.1 trillion. Like you also mentioned, largely basically it was due to adjustment of premium to reflect the asset replacement cost and also the impact of naira devaluation of foreign currency denominated policies. I'm looking at the impact on profitability. If we look at the insurance service results, which replaced the underwriting profit margin, it's still low, still less than 10%, right? However, if you are looking at the overall profitability, right, the industry did better. In terms of return on revenue, it's actually even improved to 26%, while the return on equity was higher at 32%. It surpassed 30% for the first time in history, largely due to improvements in the investment portfolio. To the second part of your question that has to do with susceptibility and vulnerability to macroeconomic headwinds. And what we've seen also is that normally insurance policies, right, and the insurance industry should actually be anti-cyclical, meaning that in period of economic downturn, businesses and individuals should actually be using it to protect themselves, right? However, having said that, we all know that when there is a significant adverse impact on the macroeconomic environment, it affects and impacts the purchasing power of customers. Having said that, we know that some insurance policies are compulsory. Even those that are not compulsory, some businesses see that it is important for them to have it, particularly during period of economic downturn when their purchasing power has been impacted. So what you see is that irrespective of the direction of the economy, you see that the insurance revenue will keep on increasing, at least until the near term.
All right, one more before I move away from, revenue generated in financial year 2024. Does this amount equate to any significant difference in insurance penetration? Because at the end of the day, that's what I want to hear, insurance penetration.
Unfortunately, no. Right. Even there are some that even believe that insurance penetration could have actually even reduced, albeit marginally, in 2024. Because we all saw what happened last year, right? There was significant pressure on purchasing power of customers, and that one actually even impacted. And what we saw was that, look, a lot of customers were even trying to even downgrade their policies, if I can use that. You see people that hitherto were actually even used to subscribe to the comprehensive insurance policy, some of them moving to third party, and some of them even trying to even reduce the sum assured on some of their policies. Having said that, what supported the industry's insurance revenue was largely due to repricing the policies given the uptick in the asset replacement cost, and also the impact of the naira devaluation, which bloated the naira value of foreign currency denominated policies, which is basically what we have in the oil and gas and the aviation and also the energy segment of the industry.
All right, away from that, I'd like to know your projection for 2025. But before then, I see you're betting on the insurance reform bill to sort of fast-track transition to a risk-based capital regime. I'd like you to talk to us about the import of a risk-based capital system.
Okay. The risk-based capital system is simply determining the minimum capital that an insurer is meant to hold based on their risk exposure, based on the risk that they actually have in their portfolio, and not only based on a flat and constant capital base. For instance, what we have currently now is largely everybody just comply with the minimum capital. But with the risk-based capital, like to be similar to the capital adequacy ratio regime that you have in the banks, what we're going to have then is that, look, depending on the risk that you have in your portfolio, that will determine the level of capital that you need to keep. So, for instance, if you have more high-risky policies, such as what you have in the oil and gas, the aviation side, that actually have more risk, as an insurance, you notice that you need more capital compared to somebody that have relatively low risk portfolio that contains things like motor, things like annuity in which you can predict the outflow. So what you will see is that you're not only focusing on the regulatory minimum capital. What will determine the amount of capital you keep will also be based on the risk profile of your portfolio.
Interesting, and I must say that so many analysts are actually welcoming this particular development. Now, talk to us about other innovations or maybe some sort of disruption, positive anyway, that we should expect from this particular bill.
Yes, the bill, although it was passed by the House of Rep last week, and the Senate has even done that in December. So, based on the bill that we have now, although we are still expecting harmonization of the different versions passed by the two houses and the federal and the president ascending to it. But there are important things in the bill. The first thing is that the bill tried to consolidate all the various legislation that were used to regulate the industry. Before, you have the Nigeria Insurance Act 2003, we have the Marine Insurance Act 2004, we have the Motor Vehicle Third Party Insurance Act 2004, we have the National Insurance Corporation of Nigeria Act 2004, and even the Nigerian Reinsurance Corporation Act 2004. All the legislation tends to modernize these regulations, because remember that from the years that I'm reading out, you notice that some of them are more than 2 decades old, and try to even help us to even consolidate everything together. And I think another thing that the bill has done is to also strengthen NICOM in regulating the industry. Right, it's clearly stated in the bill, right, the power of NICOM to withdraw license, because I think in recent times there's been controversy on if NICOM has the power to withdraw license. And I remember there is a litigation as regarding that, but it's clearly stated in the bill, right? Right. Also, it also review upward the penalties for non-compliance of the various provisions of that particular act.
All right. Well, I'm one of those who believe injection of capital does not, necessarily translate into more adoption or penetration. That's for insurance. You can argue that if you have a different opinion. However, insurance needs to be and should be, something you probably want to call social culture, ingrained, in the fabric of Nigerians, becoming a social culture. How do you think that will happen?
I think it's actually the argument of the chicken and the egg, which comes first, right? And if you look at it today, bank accounts is pervasive. Everybody have bank accounts. But some decades ago, that wasn't the case. It wasn't part of our culture for everybody to have it. Even then, you notice that banks then had a significant amount of minimum amount that you will have before you open a bank account. But all those changed with the recapitalization of the banking industry in the early 2000s. And we believe that the ongoing the planned recapitalization of the insurance industry can actually catalyze that. Because now, the next couple of years, the concerns of insurance companies will be how can they give back returns to the shareholders? And for them to be able to do that, they won't have a choice but to try and even improve their offering, make sure they are more customer-centric, and even try and see how they can even collaborate with other stakeholders to be able to drive the insurance culture, educate the populace on how they can the benefits of insurance, how they can adopt insurance, the benefits that they actually even get from insurance, their responsibility for insurance policies, And if that is done, right, we'll be surprised how insurance is going to also be adopted. And I think also another thing that will help us is the ongoing enforcement of the compulsory insurance policy. I think that seems to be one of the major agenda of the new administration of NICOM. And I think that one will also help to drive the insurance culture in the industry. So I agree with you that ordinary recapitalization in itself will not result in the adoption of insurance policies. But however, it will compel the insurance companies to collaborate with others to be able to drive this culture with the ultimate aim of improving their profitability.
Right, let's pick a bit of numbers now. Apart from regulated entities who must take up some policies, would you say more premiums come from the retail segment of the market or the corporate?
Of course, in Nigeria, the insurance is still seen as a luxury by most consumers, particularly the retail side. So what you see is that is the corporates that largely dominate the insurance book in Nigeria. And if you look at the major lines of businesses, right, oil and gas and fire, that accounts for over 35% of the industry's insurance revenue, they are largely dominated by corporates. Even although you have more motor vehicle, private motor vehicles registered, but you see that in the motor book of the insurance industry, you see that there are more fleet of cars registered there, right? So what you see is that it's the corporates that actually dominate that particular area. Why? One, they have more of the financial muscle, and two, they understand it. They understand the importance of insurance policies, and a lot of them use it as part of their mitigation for risk that may actually even occur as they are operating in businesses.
Okay, so while we anticipate 600 billion naira capital injection by insurers in compliance with the uptick in the minimum capital requirement, what impact do you think this will have on the listed insurance companies, and what will be your advice for existing shareholders and new investors? I reckon that you sort of alluded to it earlier when you were saying that this will spur the insurers to sort of sweat their assets so that they can have more returns for their shareholders. But let me get your thoughts on this. How do you think investors should react to this once it's assented to?
Okay, I think we already seen the insurance stocks reacting to it. For instance, when you're looking at the capital, the last one that you just did, out of the top 5 gainers last week, we actually have 2 that are from the insurance industry. So what you've seen as is the beginning of the year, there are some insurance companies that their share price have actually been on an upward trajectory in anticipation to the capital raising activities. So you see some investors that are already positioning themselves to take advantage of it. Right, for investors, I think on a lighter note, I would say that this is the time to get your checkbooks out, right? But also for investors, this is also time to take a look at the insurance industry. What are the opportunities that you are seeing there? Try and even look at those that you think you can actually even get value from. However, I think the bulk of the recapitalization exercise will come on through more private placements than even rights issue, given the relatively low pricing of some of the insurance stocks. But like we saw in the banking industry last year when we were having the recapitalization exercise, we anticipate improved performance of the share of the insurance stocks in 2025.
That's quite interesting. Let me also mention that Sunu Assurances, which did very well last year, is trending in the negative right now. I mean, that's something you know anyway. I just needed to point that out because you were saying insurance stocks are doing very well. Sunu Assurances, anyway. Thank you so much, Ayokunle Olubunmi.
Remember also, there's also profit taking.
Yeah, that's what it is, really, profit taking. So I bet that they'll be bargain hunting after this profit taking, and then we can take it up from there. Absolutely. Exactly. Thank you so much for your time and thoughts on the show today.
Thank you very much. Thank you for having me.